Melania, can you hear us?
Yes. Now, yes.
Great, great. So I think that everyone's here, so we can start. So welcome to our AMA session. Today we're going to discuss a new topic, RWA 2.0, from tokenization asset to on-chain financial products. So quite hottest topic for X Spaces. And today we have three speakers. So our first speaker it is Melania, business development at PIPO. Uh, Ian Poirier, CEO of Engine RWA, and representative from QMC Finance. So can you introduce yourself, please? Because of replacement. Yeah.
Yeah. Hi everyone, my name is Gosha. I'm doing marketing here at QMC. Also, I've been building this project for a while now. And yeah, that's who I am.
And hey, my name's Ian Poirier. I'm one of the founders of Engine. We're a permissionless on-chain protocol to build structured products and tranches. We're turning tokenized assets into different products so anyone can build any risk-adjusted product without having to have what traditionally a bank would be to issue it.
Great, thank you. And Melania, can you introduce yourself a bit? Thank you.
My name is Melania, and I handle business development at PIPO. We're building a regulated platform for issuing on-chain warrants on pre-IP company shares. Is it a good moment for me to explain a little bit more what we're doing, or maybe later?
Yeah, you can, sure.
Okay, cool. Then I would like to give you a bit more details about what actually we are doing currently. Like most people know DeFi as a space defined by tokens and yield. We offer something different. Are you legally protected right to strike in to stake in a private company before actually the company goes public. The model, here's how the model works. We select late stage private companies preparing for listing on Nasdaq or other stock exchanges. We structure an ERC 20 warrant token issued under Regulation S, making it accessible to investors worldwide, excluding US residents. This warrant gives you the right to purchase shares at a fixed exercise price, like strike price, at the time of the IPO. If the market price at the time of listing exceeds your strike price, you profit from the difference. And since it's a warrant rather than the share itself, your cost is just a fraction of the share price, making it a lot less risky and in general highly attractive. You don't have to wait for the IPO though. You can also trade the warrant on a PIPO secondary market even before the listing. This means real price discovery, real liquidity, of course, and no asset lockup periods. When the IPO arrives, you can either convert the warrant into actual Nasdaq traded shares, deposit it into your brokerage account, or sell it on the secondary market for USDC. That's what we are doing.
Great. Thank you for introduction and briefly description of what exactly we do at PIPO. And we moving to our next section. So mostly what we actually started this MA, the mostly about the RWA.
Sorry, Roman. Jan,
Yep.
did he speak or no? Sorry, I maybe missed out.
Yeah. Sorry, what? Sorry.
Jan, did he introduce himself or not? Maybe I
Yeah.
missed out.
Ian, have you introduced yourself? Yeah. if I'm not mistaken.
I
Yeah.
did, yeah.
Yeah.
Let me
Sorry.
know if my mic came through because I did have a chance to say a little bit about myself and Engine, but always happy to repeat if needed.
Yeah, sure. Yeah, for sure. Yeah,
No,
let's
it's
do
all
it.
right. Maybe I didn't. I didn't have connection or something. It's okay.
Okay,
All
no
good.
problem.
Back to you, Roman.
Okay, thanks. The first question is, what must a token have to become a fully fledged financial product? Like, or can you give an example where these have already worked and one where they will say it worked, how it should be in your vision? Let's start from Ian. Yeah.
Yeah, let's do it. So for me, a financial product needs to be three things to be considered a financial product. Any asset needs to be three things. One is the transferability. So it does need to be able to be moved around, traded, have a liquid market, a way to enter and exit the position. The second is enforceable cash flow. So actually getting down to the end of the day of being able to understand and define exactly what you own, by who, and what happens if there's no payment, right? What happens to the cash or what happens to the asset? And then the same thing, the third, which is a defined risk position. So basically saying if something goes wrong with the asset, who loses, how do I lose, how is the risk transferred, and what type of risk do I own? Once you hit all of those three things, you have together a financial product. Right now, you're seeing a lot of financial products exist on chain, specifically with the financial intermediaries, the big players like Franklin Templeton and BlackRock. And they're really what they're doing is they have their desk that has financial products and they have wrapped them on chain. So a lot of these actions of the enforceable cash flow and the defined risk position exist, but they exist within the contracts that they've determined and sit within their company right now. And then they're using Web3 and blockchain to create that more robust and fluid transferability that we all love from crypto, right? We love the 24-hour market, the 24-hour 7 markets. We love working them in DeFi. We love being able to get instant liquidity. These are the things that they're really leveraging right now in the Web3 space. So you're seeing it successfully implemented, but you're seeing it really done today by the large players for only one of those benefits that we see in the Web3 space.
Great. Thank you. Thank you so much. So the same question to Melania. So what must a token have to become a fully fledged financial product?
Well, yeah, I can like I agree with Jan and Jan, sorry, and also I can maybe add that in my opinion as well, we can look also at the regulatory treatment as the underlying instrument in this case, like KYC, AML, like offering Cruz, custody, investor protection, all those like. Need to work, all those elements need to work indeed, and the important principle should be increasingly like same asset, same right, same regulatory treatment for everyone, regardless of whether the record is on chain or off chain. And then on top of that, I think also operational infrastructure around it is very important. Um, like custody, corporate actions, redemption, settlement, and secondary trading have to work in practice, not just in a contract. Sorry. So, in one sentence, the tokens become real financial product when the legal right and the digital token become inseparable. Owning the token means owning or being legally entitled to, and like to the underlying financial interest as well. So yeah, this is what I can. But that's what can I add on top of what already has been said.
Thanks for sharing your opinion. Quite interesting. Here I'd like to hear from from Georgi. What do you think about how what must token have to become a fully financial product? What do you think here?
So it's to be honest, I think first of all it needs to be probably super transparent towards its audience. Basically, there needs to be a lot of compliance stuff here, QAC, AML. It needs to be safe. It needs to provide some real yield if you're talking about some sort of financial instruments here, not just numbers and super giant APYs here. Basically, also it needs some sort of protection against how to say it properly. It needs some sort of protection against sudden yield drops, sudden stuff that when something goes wrong. It needs to be really protected from all this stuff like it does in traditional markets. That's probably the main thing. It needs to become real financial instrument here.
Yeah, that's true. That's true. Thanks all speakers for sharing your thoughts. We are moving to the next question. So, it's mostly general question actually. What is missing on the market for now, and like, uh, like how what should be on the market? What is missed in your opinion? Like we all know, some compliance a bit missed, some integrations with current bank systems missed, and many other. But what is most important missed in your opinion? Uh, yeah, we'll be glad to hear your thoughts here. Ian, what do you think?
Yeah, it's a really great question. I think there's three elements right now that are missing and being built in progress together that the crypto markets need to really capture this wave of RWAs. The very first is exactly what you said, is compliance, giving institutions, individuals, and companies the confidence and the ability to actually interact on chain and do it in a way where they understand the regulatory risk and they have the proper risk transfer. I've worked in RWA since 2021, and a large problem in the initial days was companies didn't have what you call controls. They didn't have the right controls to interact on chain. So those are being built. You're seeing great products that are allowing institutions to finally work on chain, and they're starting to come. And everything else that goes into compliance around that, right? Making sure the assets have legal rights to them, that we understand who the ownership is. There's a way to enforce anything if there's any issues with the assets. There's a legal entity at the end of the day that people can interact with, go after, and the regulations are there so that people understand exactly what to do, how to do it, and who is actually responsible for each step of the process. The second is a diversity of assets. So right now we're seeing the first wave of tokenization, I'm calling it, which is you have traditional stocks, you have traditional bonds, and you have now more and commodities. And now you're seeing more and more people trying to do more exotic things, just like what PIPO is doing with secondary assets. You want to see things like real estate and more exotic, rare assets like tokenized art, trading card games, trading collectibles. Those are the sort of assets that are coming in the next wave. And all of that will be required to create very liquid derivative markets, which is what you need to create really interesting risk positions. And then the very last thing is utility. So DeFi has done a great job at creating an interesting utility layer for crypto assets, and you're seeing that being applied to real world assets today. And what we're excited to see is what other innovation will come from RWAs, where you have stable assets, you have predictable yield streams, you have more nuance and interesting risk transfers and geographical exposure. We're kind of excited to say, well, what will be built now after that? So these are the three elements that I believe are what's, I wouldn't say completely missing, but are still not in the stage of maturity yet, where the market can succeed and grow rapidly. That's compliance, those are assets, and those are utility.
Very interesting opinion. Yeah. Just fully support that. So Melania, what do you think here? What is missed on the market, on the crypto market for now?
I would think some kind of consolidation, kind of universal settlement layer for tokenized financial assets, if you want. I think that like what it doesn't yet have around, like in the space, is a neutral, trusted way for tokenized security on one network to trade against tokenized cash on another network. With the same way, like in the same time, with the legal finality, autonomically, and at institutional scale. That sounds technical, perhaps, but I think the deeper problem is coordination and like economics, coordination and economics, not that much the tech side. And I think technically, like you can already do all the like atomic swaps, cross-chain messaging, tokenized deposits. I don't know, stable coins and all those. But the hard part is to make everyone agree on one settlement, like standard, and one source of legal finality. That's super important, I think, currently, and it will become even more important in the future. And there, like the three groups basically that needs to align in this case is like the banks, the blockchain crypto platforms, and also the central banks regulators. Like those are the three main groups that need somehow to align and have a common base, let's say. Like, yeah, that's shortly what I think about this.
Thanks for sharing. And here the same question for Georgi. So what do you think? What is missed on the market for now?
Yeah, I would like to answer this question from some sort of other side, from the side of adoption, because honestly, I think that for all times we've been in the market, probably from, I don't know when crypto started doing its thing, the main thing that was missing is adoption, and probably it's okay to say for me that we are still early in some terms of RWA assets and crypto in general, because yeah, everybody now talking about tokenized shares, tokenized commodities, tokenized FX funds. That's actually the thing what we do, but honestly, I was thinking about it's still some sort of not available to the mass public as we all dream about it. Basically, if you see the latest tokenization numbers, it's still less than probably I forgot the post I saw, but it stated something like the whole capitalization of RWA is like so tiny compared to the traditional markets. So it's still a lot of space to grow in terms of money flowing in markets. Yeah, and the adoption, we need to, it's not like technically, because technically you can nowadays you can do everything. Probably you can create some sort of streamlined stuff that will help to connect different parts of blockchain infrastructure, different parts of RWAs. But honestly, the main thing is missing is adoption. I think the all projects needs to invest towards education and towards some sort of transparency to help bring TVL towards our markets we're working on. So yeah, I think that's will be the short answer about what I'm thinking about the thing missing in the market.
Thank you, thank you. I wouldn't say that it's short, but the main idea is quite clear. Thank you so much for sharing. Um, Here we are moving to the next part, mostly about projects and question to the projects. The first question is for our team, for Melania. Melania, can you please explain mostly about the warrants in PIPO? Because uh, most people they don't understand what is warrants and what advantages it offers to investors. Can you briefly explain what is warrants in PIPO? What are they? Yeah.
Thank you for the question, really. Yeah, of course. So, yeah, warrant is the right to buy a share at the price you walk in today. Not the share itself, the right to buy it. Take the numbers, for example. Say the locked-in price is $50. The company lists at $30. There is no point exercising. The shares are cheaper on the open market, and by expiry, the warrant is worth nothing. It listed, for example, $80. You buy it $50 something. That's worth like $80. That gives you two things at once. Like a warrant costs significantly less than a share. So the same amount of money buys you more units. Uh, Upside moves show up harder. And the flip side, the company can do reasonably well, and still, if the price lands below your lock-in level, your specific warrant doesn't work out. A share never does that to you. Which is why the price you walk in, like the price you lock in, matters exactly as much as the company you pick. Two warrants on the same company issued at different times at different prices are different instruments, even through the stock underneath is identical, for example. What our format adds on top is the entry threshold is a fraction of the classic CPV route. You enter through a token rather than a stock of signed paperwork, and you are not locked in until listing. The position can be transferred to another eligible investor. Sorry. Yeah, that's how it works.
Thank you so much for explanation about PIPO. Here I would like to move to the next question for Georgi. So, what problem were you solving when you started QMC Finance? Or can you tell us more about your project?
Yeah, absolutely. Thank you for this question. So basically, the main thing we thought when starting QMC was the yield problem, because everybody on chain looking for a place where he can earn some income, some yield, while being not connected, not correlated with the crypto market. A lot of protocols who's been providing some of the APIs on some assets. They're initially during the hard market times, during the bear markets, unfortunately closed, or I don't know, closed their vaults and entered some bear market mode to survive the crypto winter. But we decided that we need to do something connected with the traditional finance stuff. And the main goal of our project here is to become a marketplace for the vaults where everyone can deposit funds on chain and earn from traditional finance strategies. So basically, we just entered the testnet now. We are testing our first vault from FX markets, and I think it will be released probably next week, somewhere here, and everybody will be able to join and to earn passive yield while holding shares of our vaults. Yeah, that's probably the main idea here. We got super tired of crypto yield on chain. We wanted to bring it to the traditional sector, and we wanted to connect people to the funds that are actually executing these strategies, because probably for decades the best investment strategies was only available to institutions, and we want to make it available to anyone. No, of course, after some KYC AML stuff, but in general to on-chain public, we want to make it available. Yeah, that's probably the answer here.
Thank you. Thank you so much for sharing brief explanation what you do. Um, and in this block we have a last question. It is about engine. Jan, can you explain what does engine do? Like what you building and for who is build it? What the audience? Yeah. Thank you.
Yeah, thanks, Roman. So what Engine is the infrastructure for creating structured product in tranches from real world assets. We allow users to take real world assets, convert them into tranches, so allowing one asset to be split up into multiple assets and creating unique risk units from that asset. And we allow users to take RWAs, those tranches, and crypto products and combine them together to create their own unique structured product. Um, so it really is designed to allow anyone to create new financial products themselves. And our main goal and main focus is putting that in the hands of creators today so that they can monetize their financial knowledge and financial savviness. So users come in, they create a template, we call it, which is the breakdown and the framework of what this tranche or or a financial product should look like without having to finance it. When a user purchases it, our smart contracts go to Texas, to anyone who directly mints these assets, creates it on behalf of them, and then the user who created the framework gets paid the minting fee and a portion of the AUM. So we're really allowing anyone to become a bank themselves and to issue this. Who this is for multiple sides of the market. Really, the main focus is on protocols and issuers. So people who are creating financial products today, people who are tokenizing financial products or tranching. This also supports financial institutions who are very excited to explore different structured products that they want to build. But right now, it's incredibly bureaucratic inside these institutions, takes a lot of money and takes a lot of validation from customers that this is what they want. We really flip that on its head and make it a very easy, painless process so that they can do a test round of the types of assets they want to build. And then once the market validates it, they can bring this back to their teams and desks and build it out in a much larger way. Just to touch on the problem we're trying to solve here is that right now there's a bit of a gap, which is that most of the assets that come on chain are wrapped legal tokens of a financial product that sits within a company. So right now is what we were chatting about earlier, something like a T-bill or a credit product that you see coming on chain today through someone like Centrifuge. The asset itself is still held by the bank, and all of the logic of the financial product are held on those desks. They're not happening on chain. There's still a third party intermediary that exists to make sure that the losses are calculated correctly, that the cash flow payments go through properly, that the risk transfer and the exit liquidity exist. We are giving the tools and the abilities to do that permissionlessly on chain so that the logic of across the board of how a financial product operates can completely exist through smart contracts instead of having to rely on something like a bank or a financial institution where you have this third-party risk. So we've identified that there's this hole in the market where no one can really create these except very wealthy institutions or very sophisticated DAOs and engineering teams. And we want to give this tool to everyone so that they can create the risk product and the exact exposure of their dreams without having to actually be so deeply technical from either the engineering standpoint or be well financed and capitalized like a bank does when they create their products.
Thank you. Thank you so much for the answering. Yeah, so we finished this block. Yeah, we already got a lot of information from projects, and we are moving to the next part. It is a most common question to the all projects. Like we all know that big players, financial players, are coming on the market, and such as banks, Nasdaq, BlackRock, and other. They're trying to get big pie from this market, and how your product and your vision going to compete these such big players on the market. Here, I would like to hear from Georgi. What do you think here?
So basically, from my opinion and also opinion from QMC, we think that like big institutional companies, they are actually helping the industry. They actually validating what we do, and they're not trying to replace us, but it's kind of proof that our market works and it attracts attention, and it pushes more capital towards on-chain finance in general, basically from TradFi, and also it super helps with adoption. So we honestly, I think that it's a pretty good thing that big institutional are coming. About competition, honestly, I think that when we honestly where we compete is composability probably, because our strategies they can plug into like a lot of DeFi protocols, and we can move like in sort of crypto native speed. But if bank tokenizes some fund and mostly just sits here, and it needs to, so we evolve much faster than traditional and centralized institutions. But they are here and they are helping us and they are bringing people towards the industry, and it's a great thing that it's happening, because Robinhood probably brought a lot of people to into the crypto industry in general, I think, and it's a pretty good thing that it's happening right now. Yeah.
Thank you. Thank you so much for the answering. Same question to Melania. What do you think about major players are coming on the market? How can we compete with them?
Thank you. Well, honestly, we are not competing with BlackRock, though. And I'd be worried of anyone who says that we are competing with such giants, particularly PIPO I'm talking about. Look at what the big players are actually tokenizing, like treasuries, money market funds, listed shares, assets that are already liquid, already regulated, and already owned by them. They've repurposed the commodity for a more tokenized form, and that's it. I mean, that's all. We work in areas where the economics can't reach them. We have an issuers sponsored model. The company decides to issue, and we assemble the instrument the texture, the CPV, the compliance parameter, the secondary marketplace, all those. This is a customized process. I mean, we're in a way also, I can say, aggregator. So it's not just a streamlined operation like theirs. Definitely, I mean, there's a lot of more details in what we're doing. Insiders have already made a lot of money there, while here, like on the PIPO side, it's mostly startups, the next levels of circles, or other important but less remarkable companies. So we definitely do not compete with this type of companies. We are aware they're giant, but in terms of like what we offer as service and the outcomes, like we are completely in different levels, and we are targeting like kind of different type of let's say players or participants in the market.
Thank you, Melania, for sharing. So the same question to Ian. So what do you think? What do you think about uh, big players are coming?
Yeah, it's an interesting question because I think that depending on your perspective of the Web3 market changes if people see it as a positive or a negative, specifically around the fact that if you've ever heard me speak before, I often talk that crypto is amazing. It's given a lot of people great careers and offers this alternative to the financial system. And at the end of the day, blockchain itself is more of a back chain innovation than it is a front chain or front end innovation. And so if you talk to anyone in real life who's not involved with crypto or Web3, it doesn't have a positive name to it. So the financial institutions coming are actually providing a lot of legitimacy to what we're doing and showing that what we've built and building this open finance layer has not only been worth it, but is an extremely valuable thing to society. So I think that the institutions coming is the validation point that what we've been building and what we've been doing has been truly worth it and truly a revolutionary technology. Now, where we sit against these institutions is that we do not compete with them. We're not in a game where we're trying to remove their business or are trying to take away their demand. We are in the business of giving people like BlackRock, Coinbase, NASDAQ, these sort of institutions, the ability to have utility for the assets they're bringing on chain and to create more and do more with what they have on chain. So we're really trying to be a utility layer on top of what they're bringing and trying to support them in their ability to go quickly and test and create exciting products that they would, in a past, more traditional sense, take in months and hundreds of thousands of dollars to do. We can support them in getting to these new results within minutes for dollars. So we personally are excited for that. There's a bit of nuances of what that means for the industry, but it is providing legitimacy. And a lot of the new wave of people on blockchain will be driven by the institutions legitimizing these channels.
Very interesting opinion. Uh, yeah, I'll appreciate for that. Yeah. So, in the continuing, we have final part of this. Like what has to happen for the next wave, for the retail? Like what should happen? Like for the retail, not for the institutions, that they should be involved more than institutions, because we see the current situation in the market. We see that the it's mostly for institutions. I mean RWA, but not for the retail in general. Like we saw. We just at the beginning on the market, and what should happen for the next wave such as in the crypto cycles, to bring more retail investors on the market in RWA. What do you think, Georgi?
Yeah. So I think that in terms of bringing more people, more retail towards RWA, I think that probably there needs to be some public available information about that, and you need to invest a lot amount of time towards education and adoption of the industry. But I think that retail is already invited, and they are slowly coming towards RWA industry. It's just, a little bit. Sorry to if I offend someone, but RWA industry compared to the crypto in general is a little bit more traditional and a little bit more boring. Not to offend anyone, but it's like how it is, how traditional markets work, and tokenized assets too. But also, it's kind of safe. So basically, to get more retail here, we need to explain to people that you can find some stability, some safety operating RWA assets. You can find some new ways to join some market you weren't been able to join before. So basically, I know one project who currently tokenizes boring businesses. Laundromats, washing machines, and also a lot of this stuff. And it's pretty interesting idea, I think, because it shows how many ways people can invest and can participate in this RWA industry. And I think that if we continue to do what we do, the retail will come eventually.
I think Roman may have fell off
Yes.
for a second, so I'm happy to jump in, or Mel, if you want to, feel free.
Yeah, go ahead, please.
Yeah, so I think that for the next stage of retail, it's kind of two-pronged. One is that how do we get the more classical retail that we've seen in traditional cycles to come back? And then how do we get this new wave of retail that's going to be much more interested in the RWAs and the tokenized assets? And I want to make the distinction because what we see today is frankly a result where crypto used to be the risk on darling. When people wanted high opportunity and wanted to have mass exposure to a risky opportunity, crypto was that place to allocate capital. Now, because of the AI revolution, you're seeing that money be parked more into AI stocks, so traditional equities. And so, for that first wave of retail users to come back, the risk on needs to come back to crypto. So, you need to see the liquidity increase. You need to see people coming back into the markets for the opportunity of trying to make a lot of money. So that's step one of getting the traditional retail. Now, the second stage of retail that's going to be more engaged with RWAs is a different risk profile and user profile than what we've seen in the traditional cycles. So for those users to come on chain, we need to see the way that people are interacting today. So think of people who are working their office jobs, people who are buying assets and investing, but are not going to go and get a MetaMask and go to Uniswap or go to any different DEX to buy. The assets need to be where the users are today. So think of your Robinhood. I live in Canada. We have a very popular app called Wealthsimple. We have traditional banking apps. Those applications where people are buying and investing today need to actually onboard and integrate the types of things that the teams here are building and allow them to move those assets to on-chain rails. So we need to abstract away the process of being on chain and being where the users are today for that segment of retail. And then the liquidity and the risk on appetite needs to come back into crypto for users to say, I want to allocate my capital to crypto over AI to find those astronomical potential returns that I'm looking for today. And I see Roman's back, but he's still
Yeah,
Yes.
situated.
yeah.
Great.
Sorry. Yeah, a bit disconnection. Yeah. Uh, yeah. So, thank you so much for the answering. Melania, what do you think? What will bring a new wave of retail on the market?
Mm. Well, first of all, I think that actually, yes, the retail will not be excluded from the next wave. It will be indeed the opposite. Um, and but the product has to become dramatically simpler and like before retail can really enter like for real. The missing ingredient, according to me, is a retail grave wrapped around tokenized assets, for example. The next wave needs to like the needs three main things, in my opinion: simple access, real liquidity, and clear legal ownerships. Users need to know exactly what they own and what right come with it. The bigger point is that retail doesn't want tokenization itself. I think like it's very. I don't think so. They want better financial products. If the tokenization gives them access to assets they couldn't previously buy, uh, with low minimums and easy trading and all those, then it becomes compelling. I mean, then it becomes interesting. So the bottleneck is its like product design, regulation, and liquidity. Like this is what it needs. It's needed, and this is what will happen very soon in the future, I think.
Thank you for the sharing, Melania. Uh, yeah. Fully agree. Yeah, just nothing to add here. Yeah. So Ian answered, right?
Yes,
You got
Yeah,
it.
and Georgie too. Yeah,
everyone.
everyone.
Yes,
Oh,
we're
great! Thank you so much for the for the catch up. Yep. So the last question, like, what can we change in the industry? Only one thing. Yeah, Ian, what would you change in the industry? One thing, that you fully focus on it and you want to change it, that the most one. Yeah.
I mean, I think the thing that the industry needs to change the most, which is not what I'm directly focused on, but results in supporting our objective, is making it really easy and accessible for users to interact with RWAs. Similar to what I just mentioned, the users that are going to be the most excited about RWAs and drive the most capital to this will be traditional investors who may not see the value proposition of why do I have to go get a wallet? Why do I have to buy this on chain? Why can't I just do it through my bank or my financial service applications that I'm investing in today? So getting the app, moving away from the experience that you need a wallet or you alone are going to do this, which is very appealing to us Web3 folks who, you know, are in the vision of being our own banks, protecting our own financial interest. The majority of people coming on do not feel that way. They want to just have a flawless experience and buy where they exist today. And then, if that's there and they can do all of the benefits of Web3 in that experience, so I can buy a secondary stock from PIPO directly in my financial service app, but then collateralize it instead of selling it. And I only have $400. That is a very appealing value proposition to retail, and it needs to be done through the traditional channel. So for me, it's the industry moving, especially the RWA side of the industry, moving to being where the users are today. And maybe if I can throw one more in, Roman, if it's okay, things that I think the our side of the industry, the crypto, the Web3 industry, need to change is getting out of the habit of calling emissions yield, right? While it is a yield source, it's misleading to the people who aren't that financially sophisticated, where they think that there's high yield opportunity, but not really understanding the risks and the deflationary pressure or the asset depreciation pressure from yield being a result of emissions. So for me, it's a lot of what the teams here are doing, which is getting real yield available, creating unique ways to operate that yield, and creating new cash flows, and moving away from that sort of ethos that, yes, these emissions that we're offering is the yield source.
Yeah, agree, and mostly for DeFi sector in general. Yeah, that's true. That's true. So Melania, what do you think? What would you fix the most in industry?
Well, like that's an interesting question, because actually uh, I do not like what Ian just said personally, but actually I agree. I mean, this is needed, and this is what the future should be, and this is how we are going to be like. I mean, this is going to be more accessible for everyone, and actually this type of services will be not anymore for people that have already like only wallets and they're super crypto native and all those stuff, which I actually like. But I see that I see very well what Ian meant, and he's completely, totally right. And I can stand like in terms of on a global level or everything that will change in the future. I really would stand behind him and his position, because this is the right position, despite what what my personal views are and like. How I see, I mean, a bit old school about crypto in terms of like I like it more decentralized, but for the future and for the overall development in the sector, this is needed, and I can just stand behind Ian's opinion.
If I could just jump in there, Roman,
Yeah, I
quickly.
see.
Mel, I want to say
Uh-huh.
I completely agree with you. I love the decentralized nature of things. So we are aligned that as the crypto natives, this is the ideal for us. However, I do have a lot of people, and I'm sure you do too, who are outside
Yeah,
of the Web3 realm, and I've tried to onboard many people with wallets and things of that nature, and it's more cumbersome, more intimidating. And so I think we are 100% aligned here. In an ideal
yeah,
world, this the way we want to operate would be the way everyone operates, and in the real world, a risk transfer from individuals to a third party is still seen as very appealing, and what the majority of the wave that will buy RWAs in the short and medium term will want in order to interact with it. In the long term, I think younger people, Gen Z, Gen Alpha, when they're
yeah,
investing, they will move to the way we want to, like we operate with being on-chain native. But for the immediate term, if we want to see success, I think that's the realm. So I think I just want to say we're completely aligned here, because I love the way we operate, frankly.
yeah. Okay, I got you. That's great, actually.
Yeah, yeah, that is great. 100%. Yeah, so amazing, amazing answer. And I'll be glad to hear, Georgi, what do you think here? Like, what would you fix in the industry?
Yeah. So first of all, I think I'm gonna agree with Ian and Melania because there was some pretty good topics raised. I'm fully with them on that. But from the terms of, from the point of, I think the how the industry feels right now, I will definitely change the only one thing. I want the industry to be more wild as it used to be in the past, because the main thing that attracted probably lots of people to crypto was the nature of the wild west going on inside the industry. Everything was popping out of nowhere. New projects were opening. Something was like blown up. I don't know, there was some crazy stuff going on in the early days of crypto, and I really miss it. Maybe that's maybe I'm just nostalgic, but I think I want to bring it back. I bring the feeling of the wild nature of crypto, and that's the only thing that probably now is missing, because now everything is much more focused on how to say it, focused on the adoption and focused on the that crypto becomes more and more traditional, if I can say that. Yeah, we need something crazy going on in crypto. I think I really miss it, but I hope someday it will be back.
Yeah, this industry needs more flexibility. Yeah, that is true. Uh, yeah, so we got quite interesting answers, and it was quite interesting AMA. Very interesting projects that we got on this AMA. Just want to say thanks everyone for joining. And this time our AMA is over, but I hopefully to see you on the next AMA sessions. Thank you so much for the joining.
Thank you, Roman and the PIPO team, for having us. Great conversation and a lot of fun this morning.
Thank you, guys.
Thank you so
Thank you,
much.
guys. It was nice speaking with you.
Speak to you soon, guys, and have a nice weekend.
Yeah,
Thanks again.
thanks all.
You too.
Bye.
Bye, everyone.
Bye all.